Hello everybody and welcome back to another episode of the Investor Motivation Podcast. You are joined with Amy and Robert for another fun topic.
Good. Happy Friday afternoon, Amy. How are you?
I'm brilliant.
You're brilliant?
Yep.
Oh,
always.
big statement. I met with lovely clients before.
Yeah?
Yep, it was awesome. The nice part about it was they came in with quite low income expectations. If we could get $42,000 a year, we'd be more than happy with that. And then it's nice to show them that we can bump that up to, we could even get them up to 65, and just just the delight they had around that to show, hey, you've just retired, this next 10 years is really important, mid-60s to mid-70s.
Yeah.
And they said, oh, what, $1,000 a week? I said, we could probably even do better than that.
Wow.
We just needed to prove that when they got to early to mid-80s, that whoever's left, there was enough there for the widow or widower, rather than relying on a single age pension, which is really tough with no extra. So that was a really nice chat, and it's refreshing to watch people relax in their seat to know that, oh, we've made it, we have enough.
Were they the type to be a little bit wary about increasing their spending, or they were very happy with that and just excited?
No, they were just relieved. Could clearly see they have enough, and even after our very pessimistic, first decade returns, which is essentially zero, we could prove that they will be fine. Yeah. And I made sure they understood that things change, but it was a really nice chat, and it's they will go and have more fun. Yeah. Yeah. So it was a really cool meeting.
Lovely.
But what are we chatting about today?
Today we are going to talk about how some of the richest Australians have invested and grown their wealth over time, but also we're going to compare that to how, not of the richest Australians, just everyday people can invest, and how it might be different to those people in a way. Yes. But how we can all essentially grow wealth.
Yeah. So I did a video on TikTok not that long ago, which really looked at the top 20 or 25, and I think it's on YouTube as well. But all the things that these people have in common. Yep. And so whilst not I suppose the punchline is all these people are in business. Yeah. And not everyone has the opportunity to go into business for themselves.
No.
And I think that's where it'll be important for us to cover that off, as well as the you don't want to run a business, or for whatever reason don't want to, but how do you still get exposure to the area where these people have made their money? Yeah,
absolutely. And you're 100% right. The richest Australians, and probably the richest all around the world, are business people. Yep. They know how to invest into themselves, which is generally their business, and reinvest for that growth that, being that business owner as well does motivate them to be better and do better for their business and grow their wealth ultimately.
Cool. So Amy, quick question. We won't go through these people, name by name, but who is the richest?
Gina Rinehart's still number one. Okay. I believe.
So that is essentially mining, that is iron ore from her late father, Lang Hancock, I believe. So this is generational wealth, and she's probably the one that's ended up with a lot of it. Yeah, and she's taken over as CEO of Hancock Investments and all the others. So she very much is, I guess, continuing that generational wealth, instead of, I guess, the alternative is you take ownership of something and then just sell it. Yes. But no, she is continuing that wealth building for the whole family. Yeah, and it's difficult for businesses to be generational like that, and some of the locally here in the Wimmera, so we're country Victoria, near the Grampians, but Best Wines down at Great Western, which is only 45 minutes away from us. I think that is 5th or 6th generation. Wow. And that's really cool, because you can think, and I did do a video on Haig's Chocolates over in Adelaide. Yep. And obviously they have their retail stores.
Of course you did.
What's that?
If anyone knows Rob and knows he needs a Christmas gift, Haig's is where to go.
Absolutely. So that is 6th generation stuff. Yep. But if you think about mum and dad who may have had 2 or 3 kids, and then that, so there's number 2, and then those 2 or 3 children have 2 or 3 children. Yeah. The complexity. Yeah, the amount of individuals. So they must be exceedingly good at for some of the people to say, hey, I'm happy to make chocolates, and then there might be some people with the skills that I'm happy to be the managing director and without any infighting, because we're talking about lots of cousins, lots of people that could potentially work in this business at different levels. So, how they manage that is quite interesting. But Best Wines, which is an awesome, Saturday afternoon out like we did for our Christmas party last year. It was really cool. But that is, it's very rare for businesses to go beyond that.
Absolutely.
Yeah. So Gina Reinhardt, that is obviously iron ore and other, obviously there's beef businesses as well that she's invested into some of the big stations around Australia. But that's probably some of those other investments, and like Twiggy Forrest, I think he owns R.M. Williams. These are businesses that they were able to buy because of their main business.
Yeah. So, they know the profitability within businesses, so they do have the ability to go and acquire whole other businesses, which is...
they've just got the firepower to do it because of the main game.
Yep, absolutely.
Yep. Fantastic. Number two, I said we don't need to go down line by line to assess each of them, because we know the common thing here is everyone's been in business. But the reason why I wanted to bring up number two is it's High Rise Harry Triguboff, and he's worth, I think, $26.49 billion. And the reason why I was just keen to make a comment on him, that the amount of property spruikers that I've seen where they talk about Harry Triguboff and he's worth X amount of $1 billion, they say he's made his money out of property, so you need to make your money out of property and buy apartments and property off me as the property spruiker. The interesting point here is that High Rise Harry made his money out of building them and then selling them to other people. He was a developer. It was not building and owning them. Yeah,
very different.
Like these people were trying to twist the story. Now, he probably owns thousands of his own units that he's built now, but when you're worth $26.49 billion, do the hell whatever you want.
Yeah, absolutely.
Yeah. So, and the Lowy family, Frank Lowy, which was Westfield Holdings shopping centres, similar deal to Harry. People say property. Well, yes, they built stuff, but then they sold the property to retail investors through their trusts. They just retain the right to manage and get the fees off managing the leases and the tenants and so on. Yeah. So, very clever people.
Absolutely. It's just business, again, property management, not owning and leasing themselves.
So, obviously, the common strategies that they employ is really investing, starting, running and building businesses not over a short time frame.
Lifetimes and generations, in fact.
Correct. Yeah. So that's the commonality, that people are running businesses. There is obviously there's Melanie Perkins and Cliff. What's Cliff's last name? Doesn't matter. But Canva.
Yes.
This is still a private business, and these guys are firmly in the top 10. How cool is that? And the Canva is used globally for people that aren't graphic designers. Well, no one needs to be a graphic designer anymore because of their software that is used globally, not just here in Australia.
Incredible businesses.
Yeah. So they've obviously taken on a lot of debt, a lot of risk, invested heavily into themselves, into their own business. That reinvestment is, and obviously clearly a common theme. Yep. So starting off, many of these people would have not taken out much of the profit. They would have lived off not much and reinvested constantly back into their business.
Yeah, and then once that foundation is really solid within the business, that's when, debt management, because you do need to take out a lot of debt to be able to get this growth and the leverage that they need. Once the debt management's under control and there's lots of good free cash flow, that's when it's, reinvesting, but then also the ability to acquire businesses and, scale the business up.
Yeah. Now, how diversified are these wealthiest Australians, would you say, Amy?
I think when you're looking at, Gina Reinhardt and her land ownership in Australia and, all of her mining that she does, it's probably not diversified from the level that I suppose a, smaller investor diversifies. But again, it's because a lot of that wealth is tied up in that main business and the main businesses that she owns.
Right. So a lot of the wealth is there, but that's because a lot of the effort has been, and that the effort, the reinvestment, the human endeavour to make that business bigger and better. So quite often, obviously the numbers are very big, but they don't become perhaps more diversified investors till later on in the growth cycle, where there is free cash flow and money that they can invest into other areas, which are often, like, I suppose, Twiggy Forrest, who is Fortescue Metals, owning R.M. Williams, like, iron ore, digging and selling, and boots, long way apart in between. Yeah. That is not core business.
No, but good on him, for making that diversification, really.
Yeah, and
it's not common.
And obviously there's probably Australian pride with that one as well.
Yeah.
Yeah, absolutely. So quite often these businesses, they're not that diversified. These investors, wealthy ones, are not that diversified. It's been all in on the investment that has made their money. Yep. Fantastic. What are the things that we need to think about and in common with these people?
That we have in common?
Well, no, they've got in common with each other.
Oh,
because we probably
we're probably a little bit different.
We're a little bit different. We will work our best to make to be financially secure, but we probably won't have the scale that these have got.
No.
And that's probably one of them I've brought up, the scale, the ability to scale up.
Yeah, that's exactly right, because they do own these businesses entirely, really. The free cash flow that they can generate once it's all solid and running smoothly, they have huge scalable power with all of that cash flow. Yeah, and I think this is where, say, Canvas, or so the chap from WiseTech, I forget his name, he is there. There's obviously a fair bit of software that, these are scalable products, and if the infrastructure is set right, they can sell it all over the world. Yeah. And the cost base doesn't really change that much. No, that's the great with I guess internet-focused businesses, that scalability is, I guess, not limited by anything. And
iron ore, the infrastructure, the railways, the port infrastructure, that to export X amount more, hundreds of millions of tonne. Obviously there is some cost, but it wouldn't be a replication of what they've already done. Yeah, and that's that scalability which increases to the bottom line. Fantastic. So would we say that they're all of these businesses that, to get to this wealth, they're in growth sectors. They're in sectors where there is demand for their services or their products.
Yeah, definitely. Yeah, especially if you think about, high-rise Harry, people are always going to need places to live. There's always going to be property spruikers to sell the properties that he builds. Yep. Yeah, highly scalable.
Yep, fantastic. So these are growth sectors, and obviously there's people appreciate what they do, and no doubt there'd be other people in these sectors that don't do quite as well, and that try to emulate what these people have done, but it's...
Yeah, when you reach that, majority of the market share is your business. It's hard for somebody to come in and take market share away from those people, because they just have the power to go and acquire that business. Or
So looking at what these people do, is that a bit of a guide to how we should look to invest?
I think yes, in the fact that we know that they're all business people, so we do know that business is where growth exists predominantly.
Yes.
Whether or not we're all going to be able to go and create a business ourselves to run and then get to these extremes is another question. Of course, some people might, but for the retail investor, it's knowing that it is businesses and then, making sure you're in the growth sectors there.
Yes, and I think it's worth, you don't have to get to these extremes. We've spoken in the past that, for these people, they still work, despite being worth billions of dollars, they still work because they actually like what they do. It's part of their purpose. It's part of who they are. Yeah. They enjoy the challenge. Business can be addictive for some people. And or consuming, and that's one of the reasons why they've got to where they are.
Yeah, absolutely.
But it becomes just part of their day to day. They enjoy running businesses, and so it's not about getting to retirement. And that, I think Warren Buffett's a great example of that. He is now 94. He's still chairman of Berkshire Hathaway, worth I'm not even sure how many hundreds of billions of dollars, but his habits haven't changed in the last 50 years in terms of his lifestyle, despite his immense wealth.
Yeah, he doesn't need to keep doing it to grow wealth. He just do it because he loves it.
Yeah, and I think that's that would be absolutely one of the key common traits of these people. They're highly driven and they actually love what they do.
Yeah.
They love the challenge. So for people that are, that don't have the ability or the opportunity to start and run a business, how does the average investor, say, right, well, I've got a good job that I love, but the idea of running a business is just foreign to me, can't be bothered, it's not my wheelhouse, and I don't want to have to think about it 24/7, 7 days a week.
Yeah, that's exactly where the share market comes in, because it is an online auction house for businesses, Australian, international. Yeah, if you don't want to be the one behind the wheel managing the business, you can buy shares of any business listed and have that passive, I guess, foot in the door.
Yep. Yeah, and while we're talking about some of Australia's richest people, and there's, you can go on to the AFR, I think it is, the rich list is there and has the top 25. There's plenty of very other wealthy founders and people running businesses that we can go and find them that the business they run or they started, the founder of that business, we can find them on the register.
Yeah.
They've got a lot of their own money there. So on the share market, finding these businesses, you have the ability to put your money beside the people or person or the family that are running the business. And I think the Wilson family in Melbourne that have Reece Plumbing is a perfect example. They own 70% or thereabouts of that business. You've got the opportunity to go and buy Reece Plumbing on the Australian Stock Exchange, and you're putting your money right beside the person that runs and owns most of it. I'm happy to back self-interest.
Yeah, absolutely. Yep. They're highly incentivised to grow the business, to grow not only business wealth, but their family's wealth, and hopefully your wealth if you're an owner of that business too.
I think you do need to be a believer in the sector, that it's still got growth and it's an area that can grow. So there's the share markets though, Amy, they're risky, aren't they? They're very volatile. So
that's true.
I think we need to discuss that, yes, you can get access to some of the world's best businesses, Microsoft, Visa and Meta and Google and so on. We can go on with that discussion.
Yeah.
And over the long term, it will provide people the best return.
Yeah.
The downside is there's a psychological side of this. There is liquidity. What causes liquidity?
Well, liquidity really is our ability to be in and out of that market quickly. So it's liquid, it's free flowing. With the share markets, you can buy and own the business within 2 days of buying it.
Yeah, so and then you can sell it to have your money back in 2 days. Yep. An interesting stat too, and I've been a bit cheeky here, and it was my brother Richard, who's a financial advisor as well. We were watching the news might have been Monday night, and they were talking about the clearance rates of houses was 64 point something.
That's how many houses are sold?
Yeah, it was sold under auction, so that's the clearance rate. Every day in the World Stock Exchange, it's always 100% clearance rate.
Yeah.
You don't need to wait to get your money.
No, and the stock exchange doesn't have a 60 or 90-day settlement. It's 2 days.
So
it's much more liquid, yeah.
So this liquidity, the ability for people to get in and out quickly is also the opportunity and also part of the volatility, the risk that scares people away from investing in the share market. So when you invest into businesses via the share market, you need to be mindful that when you buy in, it might go down.
Yeah. And
you need to have a long enough time frame.
Yeah. You want to be able to ride out that volatility and know everybody knows, and that's why people are too scared to go into it, because you look at a graph and it's up and down, but as long as you go in knowing that you're a long-term investor, you can ride out that volatility, and it doesn't need to be as scary as it looks.
Yeah, and it makes sense if you think about it, that the short term will be dictated by people's fear and their greed, as people are getting nervous or fearful and jumping out of the market, or then they're getting greedy because we had a great return last year, then we're jumping in. That will dictate the short term, and the long term will be dictated by the people that run the business, making products and services better over a long period of time. And I think that's where it makes sense when we look through, the richest Australians. They've owned and ran these businesses for their life or through generations of their family.
Yeah.
Businesses are not built and created and made profitable in a matter of 2 or 3 years.
No, that doesn't happen overnight. It is long-term leverage as well, going into debt sometimes and being unprofitable for a period of time to be able to grow.
Yeah. So it's a lot of these people are an overnight success 2 decades after starting. Yeah. So I think I think when we had a look at some of the stats when we compare property and obviously property still provides it's a growth asset, provides a rate of return, but comparing that to global shares, I think you saw the stats comparing global shares to Australian shares, and then I think Aussie property might be on average 8%, but the international shares was nearly 12.5%.
Yeah.
Aussie market, the VAS, that was the Vanguard Australian Share Fund, was I can't remember, but it was well under the global. So you need to know that there are amazing businesses, not just here in Australia, but overseas as well.
Absolutely.
Yeah.
And I think it's overseas, obviously, and especially America, having the Magnificent Seven, they are the Magnificent Seven for a reason. They have that huge scalability.
Yep.
Australia, we are very much focused around property and mining and financials. We don't have the Silicon Valley and the up and coming. Well, we do have some, but of course in America the scale of it is just so much larger than what we have here. So making sure you have exposure to different markets with different sectors is important. Yeah,
the Australian Stock Exchange is 1.9% of global markets, so it's really small and it's not diversified.
No.
2 sectors, materials, resources and financials, make up about 55% of the market. So it's not overly diversified, and there are other sectors you need exposure to.
Yeah, definitely.
So what would we say to someone who's listening to this and they go, oh, that's great, sounds like businesses are the way to go, that's what all the top richest people in Australia have done. And they look at the market and they say, geez, the NASDAQ has just returned 26%, Amy, it's time to jump in and have some of that return. What's your thoughts? Knowing that this is general advice only, of course.
I would show them the historical 30-year return of whatever market they're looking at, and show that the average might only be that 12%. So thinking about averages, and if we're up 27%, it means we need to come down a little bit to correct ourselves, bring us back in line with that long-term average.
Cool. So, and that's the point I was getting to, is that whilst the averages might be 9, 10, 11, 12, it's not a straight line. It is plus 26%, minus 15%, no percent. It's all over the shop, and that that is dictated by the fear and the greed over the short term. The long term will be dictated by making better products and services, increasing sales, revenue and profitability. That's the long term piece. But in the short term, share markets can do anything. They can be down by 40%. And they can stay down for longer than you know, and they can actually they can be at all-time highs, and it's seemed as expensive for longer than what you think as well.
Yeah, absolutely.
Yeah. So it is difficult to time the market, but it is very difficult to invest after such a strong run. And so we would, suggest being cautious, invest progressively, dollar cost average. So there's strategies you can implement in these times as well. And one of those strategies, apart from progressive investing and dollar cost averaging, is also patience.
Absolutely. Everyone needs patience. I think I would also tell anybody listening to this podcast thinking, how do I put my money, in these businesses that, the majority owners or the founders also own? You can actually go onto most of their website and see the breakdown of majority shareholders in the business, and you can see if the directors are the founders of the business. It's a great way to put your money alongside theirs.
Absolutely. Yep, so all that information is publicly available. You'd need to check out their annual returns or their half-yearly returns to have a look at that. And I think investing alongside the people running it is, there has been a lot of research done on that, and it shows you do get better returns over the long term. Terrific.
Common sense too.
Fantastic. Amy, thank you for the chat. Where can people find you if they need to listen to more awesome education?
Don't know that anyone needs that, but they can find me on Instagram and TikTok at The Wealth Diaries.
Cool. And I'm Rob Gowdy, Financial Advice on Instagram, and Rob Gowdy on TikTok. On TikTok, please remember that I will not direct message anyone first. If I if A. Robert Gowdy, which will be a fake, messages you first, I always get back to people if they message me. It will be a fake, and please be very careful. And please check out our YouTube channel, which is called Investor Motivation, just to confuse everyone further. There is about 720 videos there that we've done over the last 13 years. And last of all, there is a lot of resources on our business website, which is consortiumpw.com.au. We've got, I think I've got a 30-long course on dealing with mortgage stress. There's lots of information.
Yeah.
Terrific. Thank you for listening.
Thanks, everybody.
Cheers.
Bye.